Welcome to Thrive Radio. I'm your host, Amy Montgomery, entrepreneur and agency owner. I help business owners break the online code to generate leads online. Today, my guest is Julie Daniel. She's a regional managing partner with Jay Galt Finance Suite. Jay Galt is a company that helps business owners establish business credit solely on their business EIN number, which protects their personal credit and assets and allows them to get the funding they need to scale. Julie, welcome to the podcast.
Thanks. What an opening, Amy. That was awesome. I'm pumped now. That's incredible.
So can you share a little bit about your personal story and how you started to work with Jay Galt?
Yeah. My journey to Jay Galt was a personal and professional progression. I worked for large commercial lenders for almost 20 years, and we always required businesses to provide a personal guarantee or collateralization of their personal assets to obtain capital or lines of credit that they desperately needed to fund or grow their businesses. Over the course of that time, I witnessed businesses fail, and that meant that the owners and their families were also heavily impacted from a financial perspective. Not only did they lose their business, but they were also left with a mountain of personal debt and even losing their home. And actually, when I was in college, my dad ended up losing his home and pretty much everything he owned due to signing a personal guarantee for his business. It was a long series of events that left me unfulfilled and questioning if how I was contributing to the world, which seems big, but truly was how I was contributing to the world, if it aligned with my moral foundation and really shaped what I wanted my legacy to be.
So can you provide a little bit of an overview of your services and what you offer to business owners?
Yeah, sure. So Jay Galt is a SaaS company, otherwise known as a software as a service. And we also include customized support and business credit coaching. So essentially what we do is we help business owners, small and medium-sized business owners, build business credit strictly on their, we're starting over. Jay Galt is a SaaS company, which is software as a service. And we also include customized support and business credit coaching. We help business owners build business credit strictly on their EIN, completely separate from their Social Security number and personal assets, so that they always have the access to capital to fund and grow their business. We also offer cash flow mapping and yearly business valuations.
So how do you help businesses build credit without the need to use their personal credit?
That's a great question. And it's funny because for a business owner to try to build business credit on their own, the average time that it takes is actually 5 to 7 years. It's very difficult because there's really never been a roadmap in order to do so. First, what we do is we ensure that the business has a fundable foundation, and that the way the company is set up is in line with exactly what lenders are looking for. Next, we partnered with hundreds of lenders that have agreed to extend lines of credit to our members strictly on the business EIN, and that have committed to report to the business credit bureaus. You know, Amy, what most people don't realize is that 93% of commercial lenders do not report to the credit bureaus due to being charged a fee to do so. Even by happenstance, if a business owner obtains a line of credit strictly on their EIN on their own, chances are it's not going to be building business credit for them anyway, because the lender isn't going to report it. So it's really interesting information that is really little known.
Can you explain the role of your expert credit analyst in providing a blueprint for businesses that want to create business credit?
Yeah, we have the software, which really it's methodical. It's a step-by-step process, and everything is just mapped out for the business owner. And it's super simple and easy to follow and easy to understand. But we realize that businesses are all unique, each have different situations. I work with businesses that have been in business for 5 months and some that have been in business for 15 years. And this is where the personal support and coaching really is maximized. Our analysts are CPAs, they have MBAs or they're attorneys, and they will actually meet with a client each month and even more if needed.
So how do you offload some of the credit risk for businesses? What does that look like? And what are the benefits?
Yeah, so this is actually where the rubber meets the road, right? This is the whole reason why they came on board and wanted to become a member. So As the member's business credit profile increases, the credit analyst and member will begin to break down what financial areas are personally tied to the business. Again, each business is going to be different, albeit how long they've been in business or really just how tethered they are to the business from a personal financial perspective. So they'll then build a plan and a strategy with additional funding and lenders to untether that personal liability. So the benefits of doing this are exponential. We could spend an entire hour about why it's beneficial to untether your personal credit from your business. But essentially, when a business forms their LC, they're given an EIN. That EIN is actually your business social security number. The formation of the company creates what is called a corporate veil. This veil separates and protects the business owner personally from any liability to the company. It's why we open LLCs. It's why we establish that business entity. But as soon as the business is personally funded and credit lines are established using the owner's social security number, the veil that we work so hard to create is then pierced. And what that means is that if this business has to close or faces any type of financial burdens, that it's actually the owner's personal credit and assets that are impacted. So recent studies cited that a business owner in the US is left with an average of $82,000 in personal debt after they're forced to have to close their business. We set businesses up for success so that if something happens, they're not personally liable and their families and their future aren't financially impacted.
So how do you help business owners with their cash flow and help them to make informed financial decisions?
Yeah, it's really interesting because most small and medium-sized businesses, they don't have mentors. What they do is they have good friends or they have some alliances or partnerships at the chamber and really intelligent people that they've met along the way. They don't really have anyone that's outside of the box that is a mentor. So, that analyst relationship is vital. And then in addition, we offer our members cash flow mapping, which is a software that's highly valuable for businesses to understand if they have the cash flow to expand, scale, or take on additional projects. Books and other expense management systems outline where the money went. It shows the past. The cash flow mapping outlines and answers the question, do I have enough money to go where I want next with my business? Do I have enough money to be in business for the next 3 months, 6 months, 5 years? Can I purchase another company and combine and expand? Can I move into another market? These are all questions that are relative to being a business owner, but do I have the money and the cash flow in order to make it happen?
So your website, I noticed it mentions that business owners can access at least $50,000 in business credit after 12 months. How does that work? What's the strategy involved with that?
Yeah, so when a business becomes a member, we provide a simple roadmap and the support to achieve this. But many times the amount of credit far exceeds the guarantee of $50,000 at 12 months. I see it all the time where business owners get much more than that within that first 12 months. But we make this guarantee because we want our members to know that we stand behind our commitment and that the system and methodology that we outline achieves the results that they not only expect, but they need, they have to have. It's essential for their success.
How do you ensure that business information matches Secretary of State, IRS, and the right credit agencies? Because I noticed you had said previously when we chatted that they've got to report to all 3 credit agencies and all of this. How do you ensure that all of the right T's are being crossed?
Yeah, so I love this question because this just is the tip of the iceberg on how many things have to be covered up front in order to build that foundation, that fundable foundation that we talked about earlier, in order to even make it through to be even decisioned to obtain a line of credit or any type of cash or capital. There's a little known company called LexisNexis, and they actually set the bar in the commercial lending industry, and they have a long checklist of items that lenders look for before extending lines of credit to small and medium-sized businesses. And in fact, there's over 125 factors that they provide scoring on to gauge a business's worthiness. Our software ensures that a business has checked every single one of these boxes so that when they do apply for a line of credit, that their business is in line with commercial lending standards and viewed in a positive, legitimate manner.
So are there any specific eligibility criteria or requirements that a business has to meet in order to work with you?
No, it's really interesting. And one of the things that I love about what I do is that I meet business owners who just got their C formation and their EIN this month. And then I work with business owners who've been in business for 20, 25 years and everything in between. It's so interesting. Their stories, their whys, their passions for what they do, what brought them to this point in their life, and why they feel like it's time to build the business credit, right, for their business. And so I would say the only criteria for a business to work with us is just a willingness to go on the journey, to follow the 7 steps that we outline and be engaged, and to understand that there is some work that they'll be involved in within this process. The software doesn't just automatically do everything for them. The analyst isn't doing everything for them. There's definitely has to be some engagement from the business owner, but it's well worth it.
Can you share some of your success stories?
We have many exciting testimonials on businesses, like I just said, from businesses that have been in business for a month or even 20 years. But it's really just about those stories where they're able to access capital with much lower interest rates and higher lines of credit just by becoming members and building their business credit. To give you an example, I'm working with a successful landscape owner right now that's just 25 years old. And he has a business valuation of $1.5 million. And it was surprising to him as well when we completed that valuation. But in order to grow, he understood that building business credit was a necessity. And he's now set up to take on additional contracts within the city of North Dallas. But not just that, but he also can make equipment purchases that are going to strengthen his competitive advantage in this area and provide really financial insurance if unplanned burdens occur, which I think that's what a lot of business owners don't really realize, that if something happens, if sales go down or if something else occurs, do they have the access to capital to be able to hold them up while they fix whatever's going on, or the market changes or whatever, why they pivot. I think COVID, a lot of people go back to COVID, but I think that was a really good eye opener for all of us to diversify and pivot and be quick and nimble when we needed to be. This particular landscape company owner, he knows how much his business is worth. And with the cash flow mapping, he knows where his business can go. And it's exciting. And then he's going to have the business credit strictly on his EIN in order to take the business where he wants to go. And many times an opportunity will present itself to a business owner and they love it, but they just don't have the cash flow to be able to attain it. With this particular business owner, he's going to be able to do that because he's going to have the cash flow and the capital in hand to be able to make decisions that are not financially forced upon him. So it's pretty great. And that's just an example. And I went on and on about him. I'm excited about him because he's really ran with it and he's doing exactly what he should be with it. But you know what? Your listeners can also YouTube Jay Galt testimonials. And there is a library of testimonials and videos of business owners across the country who've had similar experiences.
So if there's someone that's listening that is thinking about this and maybe they've listened to the podcast and is wondering what are some of the things that they can improve, what's a couple of tips that you can give them?
In terms of building business credit, what they can improve?
And in building the business credit and gaining access to capital, what's 1 or 2 tips that you would give them?
I think really just understanding what business credit is really foundational. Over 90% of business owners do not understand business credit. They don't know the scoring model. They don't know how to build it. It doesn't build passively like personal credit does. When you're 18 and you turn 18 with your social security number, you're put into the systems, right, for personal credit. And you open one little credit card and the longer you pay on time, the more that credit score rises. But that's not the way business credit works. Business credit does not build passively. So it's really important that business owners just really understand the foundations of business credit, because without that, they don't understand how to utilize it or leverage it. And really, most of the conventional lenders out there aren't giving business owners any other option except to sign personal guarantees, provide collateral, and tether their personal credit to the business credit. And unfortunately, too many business owners are doing this because they just believe that they don't have any other options. And they do.
So, Julie, if there are people that are listening that would love to work with you, what's the best way to contact you?
They can contact me at jaygalt.io/JDaniel/, or they can email me at jdaniel@jaygalt.io, or they can also give me a call, which is also, my contact information is also on my website.
And I'll put your links down below. Thank you so much for coming on today and sharing your expertise.
Thank you. I've really enjoyed it. And if we reach one business owner, it can be life-changing, Amy. So I'm super excited.
Definitely. Thank you so much for listening in today's podcast. And for more information about our podcast and upcoming shows, you can visit acalltothrive.com. Thank you, everyone, and have a wonderful week.